Fadi, let's get right into it. Since the start of the year, $3 billion in foreign inflows coming into the Saudi exchange. What happens next here? Because there are a lot of concerns still from the international community about what investing in Saudi Arabia will really mean. Because, of course, we had all of the discomfort over what happened at the Ritz-Carlton at the end of last year. A lot of people saying, we don't know what the government's going to do next. What should be the message then from the government at this point when it comes to bringing in these international investors? You've got the approval of MSCI, but what more are they going to need to do?
I think not much to be done. I think we have designed a fantastic macroeconomic master plan for the years ahead. I think what the foreign investor didn't like in the past was much more related to the uncertainty, and that is of if you want governance and of oil, the oil markets. Saudi has long been correlated to oil, and rightly so. And I think the paradigm change had happened with the new Crown Prince and King Salman was to really correlate it to the macroeconomic fundamentals. And I think this would resume, I would say, the foreign inflow, and specifically inflows from institutional investors to the Saudi market. And the $3 billion that you just talked about is an illustration of that, because if you look at the whole of 2017, we had $100 million of outflow despite the Ritz. So the Ritz was media sensational, but I think what really mattered for investor was stability and uncertainty. And now that I think these two, the oil market is no longer as uncertain as it was, despite being more relevant now considering the macroeconomic master plan. And I think the fact that you have, for the first time in the history of the kingdom, a king and a young crown prince that's able to implement the plan that they have conceived for the few decades to come is
which
actually
we haven't seen before.
Which we've never seen with the past kings, each coming with his own economic agenda and overhauling his successors. So I think this is the big turning point, and I think the MSCI is the culmination. I think is the starting point for the inflows happening in Saudi.
What does this mean for the private sector here, though? Because there has been a depression in the private sector over the last few years. That's, of course, not only just having to do with the oil price itself, but obviously what happened at the Ritz-Carlton, targeting so many of the local investor community. What does the MSCI inclusion mean for them? Do you think that we're going to see them getting back into the market and reinvesting more of their capital here at home?
Well, it's a very good question. Let me tell you, 70% of the Saudi market of the float is traded by local investors. So it is and these guys have been on the sideline for a while. So having them coming back is of the essence. It will create, I would say, a double up on the market. The reason why they've been on the side is they've also been shell-shocked with the changes that happened. They've been used to a subsidy culture depending on oil. They've seen low oil prices, and all of a sudden a subsidy culture that's changing. That's, I would say, for some it was perceived as austerity measures, but a much more profound master plan for the economic changes. And they couldn't take all of the changes. What would that mean to petrochemical prices if you remove the subsidy? What would that mean for retail if you reduce purchasing power, and so on and so forth? So now that all this is kind of unfolding and we have visibility, I think local investors will be coming back into the market, triggered by the institutional investors, international investors coming in. So there will be a party happening in their backyard, and they'll have to take part in it. And I think you will see eventually soon a lot of the liquidity that's been on the side for the past 2 to 3 years. As a matter of fact, we have only about 3 billion riyal, which is short of $1 billion of traded liquidity in Saudi. This has been the lowest level since the financial crisis and the Arab Spring. So we expect that to pick up drastically, was triggered by MSCI for investors, but eventually, very quickly afterward, following suit would be the local and retail investors.
And there's a lot of talk as well about adding Kuwait to the MSCI Emerging Market Index in the next year or two. A lot of questions about how that's going to impact regional investing, regional markets. And really, as we know, Gulf markets, Gulf economies are tied very much to the Levant, to Egypt as well, and to what happens there in terms of their investment initiatives and plans. How do you see this playing out over the next decade?
I think integration of all the local market that have the maturity into the MSCI EM index or into any index in the world is actually a good thing. The GCC has always been perceived as a frontier market. When you go speak to global investors, they perceive India or China and LATAM as the main 3 hubs for emerging market. With the weight of Saudi added on top of that of Kuwait, added UAE, of Qatar, you will have a massive, I would say, market that will be included, that will become a new reality of deployment for institutional investors.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.